Hey, it's TJ, your mortgage guy. Last week, I put out a post asking for you guys to comment and let me know what topics you'd like me to cover. So this week, I wanted to cover the topic where someone asked about what happens if I make extra payments and how does that impact my mortgage. So I put together this chart to kind of show us visually what that looks like. So I did a couple different options. On the left-hand side, we've got your regular payment. This is assuming a $300,000 loan and assuming a 6% interest rate. Again, this is a good ballpark idea for what we see locally. We see an estimated payment of around $1798. And again, this is a 30-year term. Now, if we wanted to make one extra payment a year, what I did was I took the $1798 and divided that by 12, which means that we'd be paying about an additional $150 a month. So our total payment would be around $1948. And if you wanted to be really aggressive, I did an option here to make two extra payments a year. Again, taking that 150 and doubling it is 300. So I'd put our total payment at 2,098. So the cool thing about this is, as you can see here, again, we go from a 30-year term. Making one extra payment drops us down to 24 and a half years. Making the two extra payments drops us down to 21 years. So again, it's pretty cool how making one or two extra payments can knock a lot of time off of your payment. Now, the chart over here, again, this is based off your regular payment. If you make the one extra payment a year, it's going to cost you an extra $150 a month. If you make two, it's going to cost you an extra $300 a month. Again, it's pretty self-explanatory. Now, the thing that's really cool that I want to get into is the savings. So I did both a short-term and a long-term savings. So you can see short-term first. So over the first 5 years, compared to the regular payment, making one extra payment is going to save you about $114.65 total. The extra payments to be $29.31. Again, that's not a ton of money, but as you compound that over the next 30 years, take a look at what this looks like. So let's look at the interest you paid over 30 years. So if you make your full regular payments over 30 years, you're going to pay $347,000 in interest. That's mind-blowing. It's more than what you paid for the house. If you make one extra payment, that number drops significantly down to 273. I mean, that's a huge drop. But take a look at this. You make the two extra payments, it drops down to 227. So you can see there's a huge savings difference as you pay down the principal. Again, there's a lot of benefit to paying extra towards the principal to knock this out early. If you have any questions or want to see a different scenario, don't hesitate to reach out. I'd love to help you with that. Hope you have an awesome day. I hope this was informative.